One of the things I learned when I became a broker was that 90% of people who open up speculative trading accounts end up losing all of their money within the first couple of years. And there's a lot of reasons for this, and let's going to go over those reasons for failure before we talk about how to be a success. The number one reason that people lose money in the stock market is that they hold on to falling stocks. We're not going to do that. We're not going to delude ourselves into believing that we're long-term investors. That's not what we're here to do. What I'm going to show you how to do is how to pick stocks that are rising in value, how to stay in those stocks while they're rising in value, and how to get out if they start to fall. You should never hold on to a position that's causing you to lose money. That's mistake number one. Another mistake that many new investors make is they overtrade. They want to be in the market all of the time because they feel like they're going to miss out on an opportunity if they don't have their money constantly invested. Well, it turns out that you want to keep your money on the side until you've found an opportunity that makes sense to risk your capital. So if your money is constantly always invested, you're probably making a mistake. Most likely you're doing something wrong. Another challenge that many beginning traders face is that they want to trade off of tips. They're always looking for someone else to give them advice. I'm going to give you the tools where you will be able to go into the market, find stocks that fit a certain criteria, trade those stocks based on that criteria. You're no longer going to need to subscribe to newsletters or tip sheets or pay attention to the financial news network. In fact, all of those things will probably be detrimental in your trading. You're going to have to develop patience. One of the things that we do that makes us most successful in this market is we sit on our hands a lot. And what that means is if there's no trade to place, you don't place one. You just stay on the sidelines until the opportunity is right. And when the opportunity is right, you place your trade and you let the market determine what's going to happen next. If you buy a stock and it goes up, well then great. We're going to move our sell order up behind the market at least once a week. And if the market falls down, our order gets triggered and the stock is sold automatically. If we get into a trade and it immediately moves against us, we're already going to have a stop loss in place. If the market hits it, the position is closed. Again, the market's going to make these decisions for us. We do not have to sit and watch the computer all day long. Place your trades, be patient. If you don't see a trade, stay in cash. Also, it would probably be beneficial for you to avoid any financial news networks. Don't read the financial papers. Don't watch anything on TV talking about the economy. Most of that stuff is smoke and mirrors anyway, and it's actually put out by Wall Street in order to create angst to get you to trade. You see, Wall Street makes money off of transactions. They need you constantly getting in and out in order to generate those commissions. Well, our game isn't to help pay commissions. Our game is to make money from Wall Street. Stay away from the financial news networks. Another challenge that many people have in the markets is they have a fundamental misunderstanding of how stock prices actually work. Well, we're going to cure that for you as part of this course. I'm going to show you the philosophy behind what makes these stock prices move. So as you're looking at the price fluctuations on a daily basis, you're not going to get suckered in by all of the weird theories that people have about what makes a stock go up and what makes a stock go down. When you look at a price chart, you're going to know exactly what phase of the stock's business cycle this particular stock is in, and then you'll have a clearer understanding of what to expect next. The final thing that you're going to get from this course that most traders do not have is I'm going to give you a workable trading system that you don't need a computer to have, but since computers are now ubiquitous, it will help you, but it's not necessary. With a workable trading system, this is going to allow you to let the market decide when you buy a stock and when you sell a stock. Your job is just to try and select the stocks that are in the right position to make the biggest move in the shortest amount of time. And I'm going to show you how to do that.